Why You Should Invest in the Stock Market by McNamee. Most people go through life thinking that working a job and saving money in a bank account is enough to build wealth. But the truth is, if you want to create real financial freedom, you need to put your money to work. And one of the most powerful tools to do that is the stock market. The stock market might sound intimidating, but it's really just a place where people buy and sell small pieces of companies. These are called stocks. When you buy a stock, you're buying a piece of a business. That means you can become part owner of companies like Apple, Microsoft, Amazon, or Tesla. If the company grows and earns more money, the value of your stock usually grows too. Some people are afraid to invest because they think the market is just gambling, but it's not. Unlike gambling, where the odds are against you, the stock market is backed by real businesses, producing real products, earning real profits. Over the long term, the market has historically gone up, on average about 7 to 10% a year. That's a much better return than any savings account or hiding cash under your mattress. Another reason people don't invest is because they think they need a lot of money. Not true. These days, you can start with as little as $5 or $10 using investing apps like Robinhood, Fidelity, or Webull. And you don't need to know everything to begin. You can buy something called an ETF, Exchange Traded Fund, which lets you invest in hundreds of companies at once. A good example is the S&P 500 ETF, which includes America's top 500 companies. It's like buying a small slice of the entire US economy. Time is your greatest advantage. Thanks to compound interest, your money earns interest, then that interest earns interest, and so on. Even small amounts grow big over time. If you invest just $100 a month starting at age 20, and the market grows at 8% annually, you could have over $300,000 by the time you're 50, and over $700,000 by 60. That's the power of starting early. Still worried about risk? Here's the truth: doing nothing is riskier. Inflation means the value of your money goes down over time. That $100 today might only buy $80 worth of goods in the future. So while saving is important, investing is what actually grows your money and protects your future. Some of the best stocks to consider are called blue chip stocks, companies that are stable, well-known, and have a history of steady growth. Think Apple, Microsoft, Coca-Cola, or Johnson & Johnson. These are the types of stocks that have survived economic crashes and kept growing. Another smart move is to look at dividend stocks, companies that pay you money regularly just for owning their shares. That's passive income in your pocket. If you're willing to take a little more risk, growth stocks like Tesla, Nvidia, or Amazon can deliver higher returns. These companies reinvest profits into expansion, and while their prices can swing more, they often offer big long-term gains. You don't need to be an expert. The key is to get started. Stay consistent, keep learning. Don't panic when the market drops, it always comes back. Even seasoned investors see their portfolios go up and down, but over the long run, the trend is always upward. Think about this. Every dollar you invest today is a little worker going out to earn more dollars for you. And as time goes on, those workers multiply. Eventually, your money will earn more than you do. The truth is simple. You don't need to be rich to invest, but investing can make you rich. Don't wait, start.